Video on from last week, we covered in total now 968 quarterlies, which is pretty much every quarterly, right, in the past 6 weeks or so. So just to build on the stats that we also showed last week, about a quarter is loss making, right? And 70% of them make consecutive losses. So the definition is that, 2 quarters in a row at the very least making losses. And then we are looking at 36% of them that dropped their earnings year on year. Almost 20% paid dividends. 1% of company paid more than a 5% dividend yield. And just roughly, right, of that 1%, which is roughly 9 companies, right, 9 or 10 companies. How many of those 10 companies paid a 5% dividend yield and above? Not, or mainly because of a special.
So I think there's like 4 or half.
Yeah.
That is special.
Okay.
Then the other one is just like because the share price dumped. That's why when they paid dividend.
So really, you're looking at about 5 companies that paid mainly through operations that have above 5% dividend yield.
Yes.
Okay. And out of all this, less than 5% of companies we found interesting. So we will share with you some of them here.
Just a quick comparison between a few months ago. So you can see that previously we also did like a comparison between the statistics on the making losses, how many make losses consecutively and earnings drop. So the first thing you notice that the numbers actually start to drop, especially for making losses. Right now it's like 4% lesser. And then previously there's 51% earnings drop. Now it's 36%. So you already can tell that there's improvement already compared to last quarter. So you can say that last quarter's tariff impact, a majority of it is already accounted for that 3 months ago. So right now it seems to be like quite steadily going up. So a few things that we'll be covering. The first one is pawnbroking. And if you look at the share price, only Wellchip is going up year to date. So they are up about 41%. Whereas for EMCC and Papajack, they are pretty much down. Actually, they're down about the same, like 5%-ish. But if you look at their numbers, right, it's actually very, very good. So each of them, they are up about 20% to 78% of earnings growth, especially for Wellchip. Wellchip one, it's going up close to 78%. EMCC is up about 50% if you compare with its annualizer, whereas for Papajack, it's about 20%. So that's why you can kind of like expected why Wellchip did so well. It's up 40% because their improvement is just quite epic. The second sector, which is doing well, it is cement. So that we have M Cement, Hume Industry, and also CMSB. Obviously, M Cement is the one that is doing very well. They are up 36%. Hume Industry, this one is quite a surprise that year to date they are down like 1%. Although there was like up in terms of like the previous like few months ago down. Whereas for CMS right now up 90% because there's a lot of budget or money that is coming from the federal government. They are giving to Sarawak and so CMSB is also benefiting. So if you look at their numbers, it's also pretty much very decent. It is especially an up cycle for M Cement, whereas for Hume Industry is pretty much flat already. While for CMSB, this one they are still struggling since the get-go. Nothing much has pretty much changed for CMSB. Okay, the third one, which is kind of like unexpected, is the education segment. So Cyberjaya Education, previously, which is owned by SMRT before they sold it to but one of the other listed companies. I can't remember what's the name. It starts with the letter M. And another one, which is Segi International Berhad. So these two companies also are doing pretty decent.
So we also know Cyberjaya Maha is buying, right?
Yes.
CEO of SMRT.
Exactly. So he's buying shares in Cyberjaya Education. But to be fair, he's increasing his stake from like a 0.8% to right now 3%.
Okay.
So I think that's pretty fair. It's okay. So if you look at the numbers, it's very, very decent also. Latest quarterlies, they are all improving, especially margins also is improving. Revenue and also earnings is all-time high for cyber education. Whereas for Segi, is also pretty much the same. Revenue is also increasing, profits also is increasing. The reason why they say this is like improvement is because there's more student enrollment in these two universities. I'm not sure it is the same for other universities, but the numbers do suggest that there's more like foreigners are coming into Malaysia to study their university, especially the tertiary education, right? So it's pretty interesting to see that education segment is doing well. Okay, consumer, this one I think has been doing fine for the past few quarters already.
So what explains the Life Water? So for context, Life Water is
the Sabah's
it's a beverage brand in East Malaysia, right?
Yes.
So they have their own like Fanta, they have their own
correct. They have their own tea, right. They have their own like spritzer, light water.
Yeah.
So it's like a Sabah kind of like spritzer.
But the variations are very similar, dividends are similar as well.
Yeah. So previously they were about 17 times price to earnings ratio, but recently people start to buy because their numbers are pretty decent. It's improving and it's booming as well. So for the case for spritzer, right, their average selling prices and sales volume are going up. At the same time, the ringgit strengthening helped them to reduce raw material costs.
Okay.
So it's like a triple factor that improve their results. I think it's the same for LW Sabah. So that's why the market kind of like gave them kind of like similar PE ratio as compared to Spritzer, because they just see that these two companies are quite similar. And then property and construction, I think this one we talked about it last week already, and also in our previous property and construction stocks that we mentioned also is inside here. So Berhad, LSH, and also Kerjaya Prospects, these few companies did very well. Obviously, we're not going to talk about every single construction and property company, but majority, if you look at the numbers, right, in terms of their profits and earnings, most of them are actually doing very well. And if you look at the numbers, obviously Berhad, all-time high earnings, all-time high revenue. Kerjaya Prospect is flat, but is growing slightly. This one has been like growing every single quarter lah. So it's very, very pretty decent for Kerjaya. LSH also, this one also, since they transitioned from lead market to Ace market, they also have been reporting like growth in terms of their earnings and revenue. And it's a fun fact is that LSH is kind of like related to Ecovest. So their family, they're kind of like related to one another lah. And another one, which is a very high yield. Just now we mentioned there's only like a 1%, which reported very more than 5%. So especially very, very high yield, it comes from FPI and Jasa Kita. So FPI, if you guys recall, they actually gave about like a 50% yield at one point when the share price was around RM1.70. Yeah, and then for Jasa Kita, they give also a 12 cents dividend because they want to distribute out all the cash that they have, and then they want to pass it to the new management. So this one, their dividend yield is about 30+%, which is pretty high. So yeah, that's about it for today's quarterlies.
Basically, we are improving. And
yes.
so what it could look like is that, because if you look at the market as a whole, it's down, right? Or flat or down.
Yes, flat.
Malaysia, right?
Yeah.
So we are seeing the fundamentals actually improve. Some people might say, well, a lot of them are still not profitable. How is that good fundamentals? Well, when it comes to the stock market, if you are losing 10 million and you now only lose 5 million, that is actually an improvement, right? So we are generally seeing this. Doesn't mean that the stock market is going to go up, as a result, because again, this is 900 over companies, right? So we have to zoom into specific companies, but it does seem that things are a bit sunnier.
Yeah. And also it's because we are coming from a low base.
Yeah.
Because the last quarter
So
we
bad
had
quarter,
that. Yeah. So everything is down. And yeah, what surprised us is that previously we did mention that SST, utility, wage hike, and also tariff might impact for this coming quarter, but it didn't really impact, as you can see from the numbers over here. And another thing that we share inside our FIRL Bites is that the foreign funds team right now, they are all buying consumer-related stocks and those companies that have domestic business instead of export. So there's a few names that we shared over here inside FIRL Bites. There's Maybank, SD Guthrie, which is Saint Darby Plantation, 99 Speedmart, and also Nestle. So this one, they have been like actively buying the stocks for these few companies. So there is some sort of theme that is going around in Malaysia stock market right now. So the last question is, what do we look forward in 2026? You want to go first?
I think Malaysia is experiencing the same perception that people had maybe in 2022, 2023, where there wasn't much interest. But of course, what we saw in 2024 and why we managed to take advantage of 2024 is because people were ignoring Malaysia because of the previous 2 years, right? So 2024 was a good year, and we are seeing a reversal of that in 2025. So if you remember, I think even like I'll just compare, let's say STI, which is the Singapore market. 2024 wasn't doing so well.
Now they're doing well.
Now they're doing well. So this is a reversal, right? And the basic point is that things move in cycle. So if you recall our videos on quarterlies last year, or even our webinars and generally our videos, we were saying despite the good times, the better times, that things could start to change, and we cannot take the recent past, use recency bias to say this is going to continue in the next year. True enough, if you took what we said that seriously, you would discover that, hey, 2025 was like a semi-prediction bias. So again, we are not in the business of making predictions, but we want to prepare you to know that, to ensure that you do not look at this year's performance and extrapolate it to next year. This is a standard human behavior. Yeah. So we do not want to be influenced by this sort of emotions.
Yeah, I think 2026 is still going to be a relatively stable year for Bursa Malaysia. Not to say that it won't go down now, but from what we have gathered from companies, right, they are all like business is still doing fine. So it won't be like sudden upside for 2026 as compared to 2024, because 2024 we have a special catalyst, which is data center. So that is where a lot of MNCs start to pour in money, FDI money into Malaysia. So that's why we have a big rally in the stock market, especially for Malaysia. Whereas for 2025, things start to like priced in already start to cool down. You also start to see, data center companies from MNCs. They are not really commissioning their data center as much as expected. Electricity consumption also wasn't as high as anticipated by the government, but they are trying to push it that. So there is a lot of fear right now in 2025 because, what we expected was a bullish year, but then it turned out to be not so bullish. So hopefully for 2026, people are kind of used to 2025 situation already, and then there will be some sort of a tiny little growth moving forward. Obviously, the theme that we're going to be looking at is mostly going to be related to domestically business in Malaysia, less so in export related because, not to say that tariff is gone, tariff is still there. And not to mention that China, you remember that we mentioned about anti-involution? But what happened was that they didn't really do any anti.
That's right. Yeah.
Yeah. So that's why the export market is still going to be quite challenging going forward. Yeah. But
basically.
if you want to get the best idea that we have, you can check it out inside FIRL Pro. We share a couple of companies over there. We do in the form of write-ups. So if you want to see, how we do our analysis on companies that we find interesting, business model, risk, numbers, and also the management, everything is inside over there. And on top of that, we have 3 model portfolios for you guys to refer. So we have the Malaysia portfolio, and just to give you guys an example, KGB is our top performer over there. And then for Futu, is our top performer for the global stock portfolio, and Valesto, it is the second actually top performer in the Boring portfolio. So yeah, if you want to get some insights, especially some of the information that is rarely published in the news article, because sometimes we meet up CEOs, industry experts, customers, suppliers, and we get some special insights that the reporters or journalists might not capture. So we share that inside FIRL Pro. And yeah, if you want to get a taste, you can check it out inside our free sample. The links will be in the description and comments, basically to see how we do our write-ups, our management notes, and also one of our video inside SIB. So that's about it for today's video. See you guys next week.